Hey, this is June from Turning Point Life Investment, and this video is for the week ending in April 18th, 2009. So we ended another positive week. Notice how we have 6 consecutive straight up weeks. Now, I know I've been mentioning these within my last couple of videos that I've been expecting the market to kind of make some kind of correction. Unfortunately, we haven't had that yet, but I'm going to show you on a daily view how next week there's a very high chance of this correction to occur. One thing you want to keep notice is that within these last couple of weeks, volume has been rather subpar. Notice how it's on very low volume, even though the market's continuing higher. So the push to the upside is getting weak, and there's a lot of signals if you look on the daily view, which I'm going to go into next, which shows that the market is getting weaker to the upside as we push higher and higher, made by traders. So I mentioned volume has been rather low, and you can see here how volume has been definitely below average within these last couple of weeks as the market moves higher and higher. We are pretty much right at that resistance level right here near 87-ish, 88, okay, from the previous high. So we're pretty much right at that resistance level, and on Friday we made another push higher, definitely bringing us close to that resistance. I'm pretty sure we pretty much hit our head on that resistance right now. Stochastic, as you can see, is approaching overbought, and it's pretty much strong lately within the last several weeks. Notice how it stayed above in this high area, okay, for the longest time, just like how it's in the low area when the market is pushed down, as you see here. Okay, so that indicates momentum, that indicates strength. Now, the other thing you want to keep notice that's showing a divergence here is the MACD. So once again, just like how volume is pointing towards a lower amount of participation, notice how with the MACD, each push made by the market, the MACD is not corresponding to that same amount of strength. So what does it mean? It just means weakness in the market as the market moves higher. Okay, I'm going into a smaller time frame, an hourly time frame, to show you a very significant pattern, which is an ascending triangle, or usually it's also known as a diagonal triangle, as you can see here. Okay, so on Friday we managed to push towards this upside, this upper resistance line of this triangle. Now, ascending triangles are usually a finishing pattern, and there's typically 5 legs to a true triangle. So we have 1, 2, 3, 4, and 5. So on Friday we pretty much finished the 5th leg up within this ascending triangle. So what does it mean? Well, if this pattern holds true, then we can expect some kind of pullback, a break. That would be your clear signal. If the market breaks underneath this rising trend line, then for sure, most likely we will head lower. Where? Probably back here around 78. That would be a pretty good deep correction that this market is duly needed in order for it to move higher. Once again, we notice that on an hourly basis we are overbought, and also with the MACD we're showing some pretty major divergence, even all the way from back there. Notice how each peak is much lower, is subsequently lower as the market makes higher highs. Okay, so that's indicating that there's weakness that's being made with the market. Okay, next we go into the VIX. So the VIX has been trending lower, right? Just as expected, because the market is moving higher and volatility is decreasing. That's where you expect the VIX to be dropping, and it's dropping accordingly. Now it's dropped so fast that it's reaching oversold. Not to mention that it's getting a little bit stretched out from its moving averages. So once again, it's telling us that the VIX is getting pretty stretched out to the downside, which means that we're going to expect some kind of pullback on the VIX. Most likely to retest this broken support area right here, right around 40. Broken support usually becomes retested as resistance. And if that is the case, if this holds true as resistance, then we can get another lower push down by the VIX. So this is something that I'll be looking for to indicate that the market's more or less finished its correction when it does correct. But notice how with the VIX, it's also pointing towards a very good chance of a correction this coming week, possibly into the next, simply because we are pretty stretched out, we are oversold, and we're also seeing some divergence with the VIX, so which translate into downside for the market. Okay, let me take it back to the daily view on SPY. Taking away the studies, right? That way you can see the triangle better. Notice how it's fitting very well into this pattern. So like I said, once this breaks, I expect ultimately coming back towards the 78 level as a good sign of support right here. If this breaks, then we might get a deeper correction, but I would definitely expect some kind of pullback towards this 78 level. Maybe not within the first week. It might take a couple of weeks for it to get there, depending how fast the correction is. But I would say that would be a good initial target for the market to correct to.